Larry Fink is now over there, BlackRock. Their Bitcoin ETF is worth billions of dollars. This could very easily be worth 20 or 30 or 40 billion dollars. And the Bitcoin market cap could easily go from 800 billion to a trillion to 5 trillion to 20 trillion. Bitcoin is money that makes all other money look terrible. And because before Bitcoin, people would say, well, what are you going to do about it? You know, there's no other choice. You know, you're never going to have good money because you'll never get government out of money unless there was some kind of sly workaround. Well, Bitcoin is that sly workaround. You've separated money from state. And people didn't really think that was ever going to be possible. And what we see what happens with private money, with money that's separate from the state. It's not state controlled. And I always say that money existed before the state. Bitcoin separates money from state. Bitcoin kills the state. Essentially, it's an existential crisis. I think in the United States, that people genuinely feel like their countries and livelihoods are slipping away. And they really need to put down bury the hatchet, whatever this is. They need to come together and figure out a way, because otherwise they're just going to lose it all.
Today we have Bitcoin maximalist Max Keiser giving us an update on Bitcoin, the crypto market, and the hidden agenda surrounding BlackRock's Bitcoin ETF. Keiser believes BlackRock is playing a much bigger role in 2024 than any other institutional investor. And while he maintains a bullish price prediction for Bitcoin, he discusses why this is unlike anything we've seen in history. Keiser points out a massive problem with the SEC's recent approval of the BlackRock Bitcoin Spot ETF and says a collapse is imminent. Bitcoin is sitting just below $56,400, up over $14,000 just in the past 30 days. Keiser discusses the collapse of the fiat money system around the world and points out that the dollar will be the last one to fall. This is where he says Bitcoin will actually show itself to be a true form of money without influence from inflation or government's continuous printing. Let's get right into the latest interview with Max Keiser as he gives us his Bitcoin prediction and why BlackRock's game plan will cause an inevitable collapse. Don't forget, our partners at Jamie Tree Finance have launched a daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free, which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join 40,000 others in becoming a better crypto investor right now.
See, the thing about it is, for 40 years, you've had a bull market in the bond market, right? Starting in 1982, when interest rates, the 10-year interest rate and mortgage rates and all these interest rates were 16, 17, 18%, because under the first years of Reagan, when Paul Volcker was the Fed chairman, they had to wipe inflation now or win. And Paul Volcker, the Fed chairman before Greenspan, raised rates aggressively to choke inflation. Now, that essentially worked. And from those highs achieved in 1981, I believe was the absolute high in interest rates.
Yeah.
They've gone down all the way up until 2022. So you're talking about a 40-year period in which the cost of money, interest rates, keeps getting cheaper. And this has meant that for 40 years, politicians in Washington have been able to not have to solve problems, just rewrap them in a bond and recapitalize and just throw it into the market with a longer maturity date and a lower coupon rate and kick the can down the road. Because there was never any moment when, although one interesting exception was under Clinton's administration. Remember when he came on board, they staged a bond market collapse in 93. Bonds got hit hard in 93. And that was all managed on Wall Street to scare and to stop Hillary. It was to stop Hillary bond sell-off. And Bill Clinton famously said when he dies, he wants to come back as the bond market, because it's the most powerful thing in the world. Right. And then so they won that battle. If you remember the 2008 financial crisis, they went in front of Congress to seek out $1 trillion relief package, and Congress initially said, well, you have to give us more than just a one pager. You have to tell us a little bit more about what you're going to do with this $800-900 trillion. And then so they went back in the Goldman Sachs, and those guys went back into the offices, and they had a stock market crash. You can set the dials and create markets go any way you want to. That's a topic for another show.
Wow.
But you can just make a crash very easily. And they crashed it, and then the Congress the next day caved in. They said, okay, here's your money. I mean, that's one thing about the market. Anyway, so to get back to the bond market. So for 40 years, the main point being that kind of the lefties got addicted to this idea that you could always just print more money, because for 40 years, the global market kept buying American bonds.
Right.
Now in 2022, it changed, and it began a period now, what you would call a protracted secular bear market in bonds, which means interest rates are going to go up now for on a multi-year basis. And so every single year, rates will go higher. Inflation will keep going higher every single year. And like in the 1970s. And people will say, it can't go any higher, can it? Can't go any higher, can it? It'll just go higher and higher and higher. And this is how the American economy collapses. It'll collapse because it's an inflationary collapse, because prices will continue to go up. Insurance continues to go up. You see those videos, I think we talked about it last time, people on YouTube saying, I make X number of dollars a month, and my rent is such and such, and I can't live anymore. So this is a person who's got a degree or an advanced degree.
The working poor.
Right, the working poor. So that demographic will more and more will fall into the poor, the homeless poor. And there's no incentive to stop that, because you have a neo-feudal class, people who really are harken back to the days of feudalism, where it's a couple of thousand essentially monarchical folks who have hundreds of billions of dollars, and everyone else is literally hand to mouth subsistence. It won't be subsistence farming, it'll be subsistence clicking. Right? You'll be on your Provision Apple product clicking on ads to get a protein pill to survive another hour. Essentially is what we're heading into if the current trend continues.
Keiser reassures that a long-expected surge awaits, leading up to the highly anticipated 2024 halving event for Bitcoin. But this will come at a cost, as the collapse of the monetary system as we know it is just around the corner. Institutions are preparing, as BlackRock and many other crypto giants are doing just that.
You're defunding fiat money, because all the fiat money, there's like $400 trillion worth of fiat money-based products, financial products in the world, stocks, bonds, cash, you name it. Planet Earth is worth about $400 trillion. And that's the total addressable market of Bitcoin. So it can literally demonetize fiat money. It can demonetize gold and silver. It can demonetize the bond market. It can demonetize the property market.
It can demonetize the fossil fuel industry. It can.
Well, I mean, it'll change. It'll
Right.
change the energy industry in a big way. You see property markets are doing poorly around the world in various spots. You see a lot of problems. And I think in part is due to Bitcoin, because people are not investing as readily into property as they used to, because Bitcoin is a superior form of investment to anything. It's going to outperform every single thing out there. The exchange traded funds, the ETFs, have made now it easier for people at least to get started on Bitcoin. They have some problems with those. We can talk about it at some point, but at least it's a way to, if you call your broker and you've got, money markets and some stocks, you can say, well, put, 5,000 or 10,000 into a Bitcoin ETF, and at least you're on the path. If you've held Bitcoin for 4 years, the minimum of 4 years, no one's lost a penny.
Right.
So any volatility is within a 4-year cycle. And within those 4 years, it's always hitting new highs, number one. And that's if you're looking at price. If you want to take this a step further, don't look at price. Look at hash rate. Look at the computational power that's going into the network. That's always been going up at a 45-degree angle for 12, 13 years. It demonetizes other forms of money, like gold and like fiat money. So gold demonetized silver, right? Silver is not used in money as it used to be anymore, because gold was kind of a superior form of money. So Bitcoin is demonetizing gold, right? Gold is not going to ever do well against Bitcoin. Bitcoin will always outperform gold, and by a lot going forward, because a lot of people, you see this in the ETF market, the gold ETFs and gold, See, now you're seeing some reallocation out of those gold ETFs into the Bitcoin ETF. You'll see the same thing in the S&P ETFs. All ETFs are all packages and bundles of various stocks and bonds and commodities will all eventually kind of migrate over to the Bitcoin ETF. And the Bitcoin ETF has already done record-breaking numbers in building capital under those ETFs. And Larry Fink is now over there, BlackRock. Their Bitcoin ETF is worth billions of dollars just in the first few days, and it could very easily be worth 20 or 30 or 40 billion dollars. And the Bitcoin market cap could easily go from 800 billion to a trillion to 5 trillion to 20 trillion if the total addressable market is 400 trillion. So the possible price appreciation will be much higher, but you'll do see volatility. People are used to the price speculation on stocks, and that the hedge fund guys taking risk and adding liquidity to it. And that's the way they kind of look at that market. But in the Bitcoin world, it's the person who's buying and investing in the computational power that's taking the primary risk to drive the incentive model, that part of the incentive model of the network. And those people have not backed away. They continue to pour money in, price up. This is the point. No matter what the price is, people are still throwing money at the network. That's my price. That's kind of the point that I'm trying to make here, is that price doesn't tell you the story.
Keiser challenges the conventional macroeconomic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures, which are selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Keiser also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Max Keiser? And what are your thoughts on his prediction for Bitcoin in 2024? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.